The mortgage industry is under pressure with interest rates going up. So do you work with a mortgage broker or do you work with a bank? In this video, I'm going to cover both options and then you can decide what's going to work best for you. And if this is the first time you're checking out my channel, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country. Whether you're a first-time home buyer, you're buying a vacation home, looking to build your real estate portfolio, or simply trying to refinance your house, I'm here to simplify the mortgage process to help you get your mortgage right. There's a link in my description below with more information on how to do so. And if you ever need a second opinion, that's why I'm here, and that's why I created this channel, to make sure that we get you the best information possible. You can always send me an email for a free, no-cost analysis, and my team will guide you through the mortgage process. Now, we've all seen how interest rates have literally almost tripled this year. It's been crazy for the mortgage industry, and in the 15 years that I've been doing loans, this is probably one of the toughest markets I've ever seen. I got into the business in 2006 and 7, so I witnessed the crash firsthand. There was a different sense to the market when that happened compared to where we are today. Interest rates back then were around 7%, and as some of you know, I've told my story where I bought my first house and my interest rate was 7%. Fast forward to today, most of you still have the idea that you want a 2% or 3% interest rate. But how do you navigate the buying process? Do you go to a mortgage broker or do you deal with the bank? And now here at Loan Depot, we would be lumped into the bank category. We are not a depository bank like Chase, Wells, or B of A. We only do mortgages, so we're a mortgage banker. Now, I actually started my career on the broker side because back in the day, you wanted to have access to as many loan programs as possible. If some of you remember the name Countrywide, they were one of the biggest lenders in the country. And brokers like myself and the company I worked for, you could broker a loan to Countrywide and many other banks that were in operation at the time. When you think of a mortgage broker, you want to think of like a travel agent. So you go to a travel agent, and I don't even know if those exist to this day. I guess they still do. But you would essentially call someone to book your flight, book your hotel, and get your whole trip situated for you. I've never personally used one, but I'm sure my parents probably did. And actually, I don't know if any of you probably have done that yourself. I think most of us have probably just gone to Expedia or something. But you're paying someone for their research to go find the best flight, best hotel, and get you the best deal possible for a fee. Similar to the broker world. That's essentially what they do. Any normal person can go open up a shop as long as they have all the necessary licenses to be a broker, and they get signed up with all the necessary banks that they want to broker their deals to. Let's just say you were a home buyer, and let's say you went to a mortgage broker, ABC Mortgage, and you did an application to purchase a home. They would then look at your overall file, your credit, your income, your debt, what exactly you were trying to qualify for. Then they're going to go shop around to all the banks that they have access to figure out what is potentially the best deal for you. But also, too, every bank pays that broker a different amount. So not only are they looking for what's the best deal for you, but also what can they probably make the most money on. This is where a lot of brokers got a bad reputation back in the crash because there were banks like Countrywide and some of these other bigger lenders that would incentivize brokers on certain mortgage products. Of course, we all know the adjustable rate mortgage was one of the hottest ticket items back in the day because brokers were getting paid 3, 4, 5, sometimes 6 points on a deal, or 6 percentage points. So for example, let's just say you bought a house for $400,000. You put no money down because there was 100% financing, and that mortgage broker sold you on an adjustable rate mortgage that paid him 6%. He would have made, or she would have made, $24,000 off that one transaction. Now, that's one of the reasons why the market fell apart. Greed took place. Buyers were greedy because you wanted to buy a house because your friend bought a house, sold it, made $100,000. You wanted to do the same thing. You could have never afforded the mortgage, but you still bought the house. And brokers were heavily incentivized to sell certain products for more profit. Now, on the broker channel today, things have obviously changed quite a bit after the Dodd-Frank regulation that were passed. And one of the things that I didn't like about the broker channel was that I had to send my file to another lender, which another processor, another underwriter would then look at the loan, and I'd have to work with that person. Now, let's just say this was a bank that I never do business with. So if they're doing thousands and tens of thousands of deals every single month, do they truly care about my one loan that I have with them? No, they really don't. But also, too, I don't know all the nuances of how does their team work. What does their flow look like? What guidelines are they following? Now, that's one of the cons that I feel as a broker. Even though they like to say that they have access to all these loans, the problem is they're not always using those programs. And in mortgage lending, guidelines change all the time. So if guidelines are constantly changing and you're not always working with the same lender over and over again, how are you then keeping up with that one lender's programs? It makes it really, really difficult to do. So if you are working with a broker, make sure that they understand the programs that they're working with, because that could definitely be a hindrance as to you getting approved and you getting financing. Now, this isn't to bash brokers, because I still have friends that own their own brokerages and they do really well. But that's one of the reasons why I left the broker world, because I wanted more control. I didn't want someone that I had no relationship with underwriting my file that could have potentially made it tougher for my client to get into a house. Now, back in the day, the broker channel was an amazing channel simply because you wanted a vast array of products. You needed all these creative adjustable rate mortgages and all these subprime loans that everyone was selling, and that was the best way to go about it. But after the crash, all those programs essentially went away, and the industry shifted to a full documentation industry where you were doing FHA loans. I remember during the crash, there were people that didn't even know what FHA loans were. No one ever did them. But you think about how prevalent they are today, a lot of people are doing FHA, which means you have to qualify. So you want that control. You want to know that who you're working with has that rapport with the other end of the party, so your loan can get done as efficiently as possible. Another pro to the broker world is if you're a loan officer and you're watching this, you might be able to make more money on the broker channel. Now, on the banking side, we do typically get paid a lesser amount simply because there's a lot more infrastructure, there's a lot more support, and there's a lot more that really goes into our compensation package that we receive versus the broker channel. Because again, if you're just, let's say, working for a mom and pop shop, you essentially can dictate what you want to get paid, but also too, are you giving the client the best deal possible, or are you making the most amount of money possible on a deal in order to make your ends meet? And I think with the shift in the market, we're starting to see a lot of that happen, because a lot of loan officers, if they don't do a ton of business, if they only have 1 or 2 loans in the pipeline, they need to make as much money as possible on their loan. So this could lead to a more expensive mortgage for you as a borrower. So that's one thing you definitely want to make sure that you are looking at and being conscientious about the decisions that you make when it comes to your financing. And if you're a first-time home buyer and you are thinking about purchasing a home, make sure to click the link below in my description where you can get a free first-time home buyer's guide that's got tons of information that can walk you through the entire process from start to finish before talking to any mortgage lender if you're not ready to speak to anyone on the phone. Now, when we hop into the banking world, I entered the banking world back in about 2011, 12-ish. And the reason why I left the broker channel, because like I said, I wanted more control. I didn't want to send a file to a bank that was potentially going out of business. That was one of the biggest things that everyone in the mortgage industry was paying attention to. There was actually this website called theimplodometer.com, and they would literally update every single morning which mortgage company went out of business. It was crazy. So if you were brokering a deal to a bank, you could literally walk into your office at 8 a.m., 9 a.m., and you could see that they went out of business and your deal is dead. And there is no one that's going to pick up the phone to help you at that point. So I wanted control. I wanted to know that the bank and the mortgage company that I'm working for is big enough that we can sustain the market shifts and we're not going to be gone overnight. So control is one of the biggest pros, in my opinion, when you look at the mortgage banking side, because my underwriter that underwrites my files, I deal with them on a daily basis. My processor that processes my files works for me and my team only directly. I have control over their day, and I can dictate whether or not this file, if it needs to get rushed, whether it gets looked at today or not. And I love the ability to be flexible, because there are instances where you might be buying a house, you might have went to another lender, they could have totally dropped the ball on you. And then now we are trying to save the deal and we've got 2 weeks to close your loan. I'm going to need everyone on my team on the same page in order to make this deal work for you. So control and flexibility, 2 of the biggest pros when it comes to working in the banking world. Now, when you look at banking regulations, some lenders are going to be a lot stricter than others. For example, I remember back in the day, one of the biggest myths in lending was that you could only get 4 mortgages. A lot of our clients at the time, they were banking with the big banks, Chase, Wells Fargo, B of A. Now, they were investors and they only thought that they could get 4 mortgages. So my clients would literally fly into Vegas and they would pay cash for these houses. But we would then find out, like, why were you paying cash for the house? And they said, well, my bank won't give me a loan. Well, why is that? Oh, they'll only go up to 4 mortgages. And I'm like, that's not the case. We can go to 10. So this is where sometimes on the banking side, it gets a bad rap because of the constrictions on the guidelines. So that's where, again, if you're shopping around, you need to shop around for the right program or the right strategy, which is what I always talk about. So that's one big myth that really hindered the mortgage banking side when I first got into the industry. Now, fast forward to today, you also see some restrictions. Let's just say if you were going to a credit union. Sometimes credit unions want you to fit in this little box. You have to have a certain credit score. You have to have a certain debt to income ratio. And yes, that's true with our side as well as what we do every day. But a lot of times that box is a lot smaller. I've talked to credit unions in the past because I bank at one and I actually got a HELOC through my bank. And I always ask, like, hey, what programs do you guys offer? And a lot of times they want their credit scores to be 660, 680 and above. So prime example, if you're a buyer and you're looking to get an FHA loan, you could have easily walked into your bank and they can easily tell you that you need a 640, a 660 for us to do any sort of financing. You might have a 580 and now you think your opportunity of owning a home totally out the window. But that's false, because we can actually go down to a 580 and get you financing. So that's where it does make the buying process a little confusing, simply because you might ask one question, get a no, and then now you give up on the entire buying process, versus shopping around for the right strategy or option if you're looking for something very specific. Now, in the environment that we are in today, in my opinion, things are pretty level. At Loan Depot, we do the bulk of our business in-house, but we also have the ability to broker loans. So for a lot of our self-employed clients or our business owner clients, we have DSCR loans, which is a debt service coverage ratio, where essentially as long as the property that you're buying cash flows, we can get you financing. Or we can broker bank statement loans. A lot of the non-QM or non-qualified mortgage loans, we can typically broker out, which a lot of banks out there, we're all using the same people. So there really isn't a huge difference from one lender to the next. There's a really level playing field, in my opinion, that's out there. Really, the big things that differ from lender to lender is really your loan officer. How long have they been in the business? What type of experience do they have with mortgage financing? And also as an investor, do they own other properties? Each loan officer out there is the difference maker from company to company, because most companies out there, we're all doing the same thing. We're all selling the same product, but the experience that you get is going to boil down to the loan officer and their team, and also the knowledge and expertise that they can give you. So I want to hear from you. Do you think the broker channel is better or working with a bank? And maybe us here at Loan Depot. Make sure to comment below. I'd love to hear your feedback on what you think. And if you found this video helpful, make sure to share this with a friend. Hit that like button to help me out with the algorithm, and I'll see you on the next video.